What's up, guys? Welcome back to DCA. So what we're going to do in today's video is take a look at where we're at right now after all of the damage we've taken since the FTX collapse. So as we all know, we were up here trading at around $22,000 not more than a week and a half ago at this point. And obviously, when FTX collapsed, we've seen an absolute breakdown in the price of Bitcoin. So we were all hoping to hold that support level right at around $17,600. That's obviously not how it's played out. We've dropped below that. And in fact, we've gone down as low as around $15,600. So today, what we're going to do is dive into the numbers. We're going to look at where we're at right now, where we're holding support at, why we may be holding support right in this zone that we are, which is right at around 16,500. And if the price of Bitcoin continues to fall, if there's additional contagion in the market where collateral damage spreads from this FTX collapse, where we could see ourselves head to. So we're going to dive into those numbers today. So with that said, guys, let's do it. Okay, so we're starting out by looking at a chart that we've looked at a lot throughout the prior months. We've been looking at this chart, or the changes in this chart anyway, dating all the way back to January and February. So what this is showing us is the supply distribution of Bitcoin. And we've watched this unfold. We've watched how this chart has essentially changed as the market has continued moving down and moving down and moving down further. We've used this chart and the information that this shows us in order to identify almost exactly the major points of support and resistance that the market has hit as we've had these pumps that have all been fake outs, where we'll see the price of Bitcoin at its best, which would probably be back at the beginning of 2022, where we saw rallies of up to around 50% or so. And then we've seen these collapses, and we've been able to mark out almost exactly where these points would happen at. So specifically, I think back to, when we were looking at 48,000, saying that that is very likely going to be a major resistance level. And sure enough, using this chart here, we were able to identify that. And then we were able to identify the points in the 30Ks where we'd likely hit levels of support. All right. And now we found ourselves back here for several months. We started down in June of 2022, hitting down to these 20K levels. In fact, going as low as around 17.6. And we were able to hold this level as a support level for some time. However, as we predicted, the longer that a bear market drags on, the more likely you are to lose these support levels. And that's the constant threat that we're facing. So essentially, if you are new to the channel or if you've never seen one of these videos before, what this is showing us is the price, like we're used to looking at it here. We're looking at a monthly scale. And then over here, we have the number of Bitcoin being held at each level. And in addition to that, you'll know that these are color coded. So what that indicates to us is if these are in blue, these are coins. So you can see at this line here, that's 375,000 Bitcoin, and that's 750,000 Bitcoin. And we're talking about the actual raw number of Bitcoin. So what that means is if you look down here to this $4,000 range, so anywhere from around 3,750 up to 4,250, in that range, there are nearly 750,000 Bitcoin, compared to somewhere like down here, which is looking from around 12,250 up to around 12,750. In that range, there's barely any Bitcoin there. So we're talking maybe 30, 40,000 Bitcoin in that level, if that, probably less than that. What does this mean? What does this mean for us? If they're in blue, that indicates that these are long-term holders. These are individuals who have held onto this asset through thick and thin. They've been holding this asset for greater than 2 years. Okay, so they've been there through the highs, they've been there through the lows, and they've demonstrated to us that they are going to essentially stand firm regardless of what the price does. These green investors, so these green coins, these are going to be short-term traders. You'll see that these pile up kind of wherever we spend a significant amount of time. So you know that we were trading right at around 20K for several months. And you'll notice in that range, in this 20K range, there's just a huge number of coins. All right, so we're talking nearly 300K, we're talking nearly 750K in that $19,500 range. There's about 500K at around 21,000, okay? So there's millions of coins bunched up right here from 18,750 all the way up to around 24,500. what is the relevance of these then? Well, what we find is that when the bear market continues and the price eventually drops below these investors' cost basis, these people will eventually, not all of them, but a large number of these coins will be sold off. They'll be sold off because these investors do not want to take a larger loss than they've already taken. So imagine if you're someone who bought right back here at around 19K as the price was falling. Well, you're already sitting per coin that you own, you're already sitting on around a $2,500 loss. Okay, so these people will continue to distribute these coins as the price goes lower. And we've watched this happen at each different price level that we've been at. So back when we were up at 45K, we watched it happen as we went down into the 30s. These short-term traders that we're seeing in green, they capitulate and those coins get redistributed back down here to new short-term traders. So capitulation leads to repurchase by other short-term holders. Now, certainly some of these will turn into long-term holder coins. People that are dollar cost averaging in. So for instance, my own personal account, I will have relatively few coins as it relates to my entire portfolio. But at each different price level, once a week, I'll dollar cost average. Okay. But importantly, I'm not someone who's going to be capitulating those coins, and I'm not someone who's, going all in at any given price level. I'm investing a fraction of a percentage of my total potential portfolio at each individual price. So someone like me will be contributing to this next group, which are the yellow coins. These are coins which have been purchased and have been held now for at least 6 months. So 6 months up to 2 years. So these are people that have bought in this price range and they've now demonstrated that they will be holding the asset. These people could eventually still capitulate here because they haven't proven over a long duration of time, like the individuals holding in this blue range have, that they are going to stick it out through thick and thin. So that's kind of what we're looking at here. So ultimately, these green coins sort of represent the sell risk. These are the people that, as we move down further and further, will contribute to the selling of Bitcoin. So these coins will be capitulated, and they'll eventually, the longer we sit here at around 16,500, they'll kind of be bought in at that level, right? And then if we continue lower again, they will sell at this level, and then they'll be purchased at whatever levels we go to next. So that's what I want to focus on today is where is it below us that we're very likely to see areas of support or resistance. Okay, so support will obviously be areas below us. Resistance would be areas that we hit above us. So we know right now that we are sitting at right here, right at this $16,500 level. So we'll just mark this out. We're kind of right in this zone here. You'll notice that when we look at the relative number of coins in this zone, and remember, let's kind of discount the green because those are going to be short-term holders. They are not as important to the areas of stability that we'll hit. Green coins are mostly going to be areas of resistance, not so much areas of support. So the blue coins are ultimately going to form our areas of support. And you'll notice that right at this level, this $16,500 level, that is in fact where we have locally a larger relative number of long-term holders, right at this 16.5 level. So this is a level that in the past, we have seen long-term holders step up. And that's exactly what we're seeing. We're seeing that in the past, long-term holders have been willing to step in at this level and buy. And that's kind of why we're forming an area of support right here, right now. So right at this 16K up to around 17K level. Now you'll notice below us here, what do we have? Just like this area has a rather large number of coins, this area down here does not have many coins. We could easily see the price rapidly fall through. So we're talking from around 16K down to around 14,250. In that zone, there just simply aren't many long-term holders. So this becomes sort of a risk area where if we did start to legitimately lose this 16K level and we're testing repeatedly into the 15Ks, I think what you'll see happen is that we will rapidly fall straight through where we're at here. We'll fall right below that level and we'll fall down here. And that will be our next area of support, which forms right below it. Okay, so we're talking right in this zone. So again, locally, right at around this 14K level, there are a fair number of coins. But neither of these areas, though, I wouldn't say either of these areas are truly a large number of coins. They're both relatively small. Okay, so when you look at, what are in the true grand scheme of things here, notice that this blue line, it's out to about here. So we're talking around 180,000 coins or so. And down here, where we're at right now, 16,500, that's even less in the long-term holder category. So in these two areas, there's just not, nothing that's convincing to say that, yep, that is where we will hit a huge amount of support at. So, we're sitting here right now at the support level, but if things continue to look ugly, if there's continued contagion, I would expect to see us rapidly fall down into this 14K zone. And even that zone doesn't convince me that, that's where we'll hit a sticking point. So below that, you'll notice that again, and we'll just get rid of this here. We'll get rid of all of these. Below this 14K zone, again, I'm not seeing much. There's almost no coins in this zone. So we're talking from around 13,750 all the way down to 12,250. So this is another dead zone, or as it's called, a low volume zone or a low volume node. Okay, so in this low volume node, there just are not a lot of coins. And because of that, there's a risk that the price just falls through these zones. And this is what we've witnessed over and over and over again. And, this is kind of how we've been so precise in marking out where we'll see the price move to. Because in these zones, when you get into them and the price starts moving, it's just like why we saw the price rapidly fall from around 18,000, 18,500 all the way down to where we're at now. Because look at this here. There's just no real significant number of coins here. Now, the 20K zone also didn't have a massive number of coins, but what it did have is a psychological level. So these psychological levels will also tend to form, at least have a higher chance of forming a level of support. So you could ultimately see the 15K level kind of act like that. But ultimately, I think what we'd eventually see is something between a 14,500 up to 15K would be a good candidate for support level. But truly, our area of support, where is it? Well, it's going to be down here. It's going to be down at around 12,000 all the way down to around, basically we have a rather large number of coins all the way down to around $6,000. So 12K down to 6K. So this is what I think if the bear market continues on and it continues on and it continues dragging on, I think ultimately you're going to see us hit down into this 12K zone. So it's all going to depend on what the liquidity environment is. It will depend on what the stock market's doing. It's going to depend on the inflation rate and what the Fed is doing. Because if we are still in a region of high inflation, let's say a year down the road, inflation is still high, the Fed hasn't pivoted, the bond market is still performing poorly. You're seeing the DXY continue to rise. These are a lot of worst case scenarios, but I don't think they're out of the realm of possibility. So if those scenarios are playing out like that, then as the bear market drags on farther and farther, what you're going to see is that we will start digging into these various levels of support that we've seen here. So we have this 12K zone kind of right here. And I don't think it's the kind of thing where we'll just immediately shoot through these levels. It's going to be, we'll bounce off, we'll come back up, maybe back to this 15K zone. And then you'll see the price, depending on how long it drags on, the price will then continue to dig farther into these support zones as even these long-term holders may begin to capitulate. But at least in the acute sense, when you get down into these various areas of support that we have, so, we're talking 200,000 coins, 200,000 coins, 250K, 300K, right? So there's millions and millions of coins down here from these established long-term holders. So it's going to take a lot to make these guys sell. You're going to have to see, just extended bear markets where liquidity has essentially completely dried up. And otherwise, 12K down to 10K, that's kind of your worst case scenario. That's the place where I see us going if there's still a lot of contagion in the market as a result of the FTX event. If that's the case, you know, you can look for in the shorter term some of these levels like 14K. But ultimately, if things drag on and continue to drag on, if, you know, what I see is if this is still going on 3 to 6 months from now, 6 to 9 months from now, you're going to start feeding into these levels. So that's what I'm watching for, guys. That's going to be it for this one. Until next time, as usual, see you.